The markets were mixed today after yesterday's major losses. The S&P 500 and NASDAQ pretty much unchanged, but the Dow did drop another 150 points today. It's now down more than 1,000 points since the start of the week.
Investment advisor and 9 News financial expert Bruce Allen joins us this afternoon to kind of walk us through what this means. Everyone's talking about these numbers and everyone's saying we should pay attention, but we don't really fully understand in some cases. Tell us how the market and the inflation rates are related.
Okay. The first thing, nice to see you both again after
you.
2.5+ years. So on Friday, the markets were very disappointed by the inflation reading, which said that inflation was up year over year over 8.5%, 8.6%. There were many people that were really hoping that we were going to see that inflation number calm down. It was slow down.
Right.
And as a result of that, that inflation reading is causing the markets to think the Federal Reserve is going to have to raise rates significantly more than they were previously guessing. Previously, they thought over the next 3 meetings, June, July, and September, the Federal Reserve is going to raise rates 1.25%. Now it looks like they could raise rates 1.75% to even 2%, and the dreaded 0.75% is back on the table.
But that's a dodgy dance. I mean, when you
Yes.
start doing that, you can manage inflation to some extent, but there's the other side of that people would have to pay.
That's why he's got gray hair.
Yeah.
It's a very tricky job. He's got 2 jobs: to promote full employment, keep the economy growing, and also control prices. He has shifted from his previous mandate of growing the economy to how do we make certain that the inflation rate is capped and controlled. He's very concerned that we're going to go into a prolonged period of inflation. And as he does this, as you point out, as he raises rates, that attempt to cool off the economy can slip from cooling it off to causing a cold spell or recession. Yeah, exactly.
So the bear market term is being thrown around, but I thought of it as more of a vague term that people used when they felt it was a bear market. But it's a technical term. There are numbers that say you're officially in or out.
It's a convention on Wall Street, Tom, that when the market falls more than 20%, they label it a bear market. Right. Now, the convention does not stand up to reality over time. In 1987, the market fell 33%. In a few months, and the market turned around and rallied right back. So, well, yes, temporarily it was a 2-month bear market, but we took off. There are other times when this is the beginning of a more severe market downdraft, like 2007 to 2009, the market fell 20%, then fell more.
And you can't tell when you're in it. You can guess,
sadly,
but you can't really know for sure.
Not until we're on the other side of it.
And for those of us, the average folks that don't even understand this stuff, I mean, what, if anything, do we see that changes when there's a bear market?
Yeah, I think there's a couple things. One is that it causes a lot of anxiety, and this is the test for a lot of investors, especially some younger investors who have not seen this for a long, long time. So I think the key thing is that there are really 3 strategies. Some people panic. That's a very bad strategy, as you can imagine, because markets ultimately do go back up.
Yeah.
Number 2 is some people just ride it out and kind of hang in there with it. That's a better strategy, and even better is as markets decline like this to take opportunities to increase stock exposure. The other side of this is that older investors, as they go into this, and some of the people that are watching this right now are older, they are concerned about how do I make sure that I've got a reserve to get through this environment. So we want to make sure that we encourage people, keep what you need to spend over the next several years and something other than stocks, so that you can get through this market volatility without impacting your savings.
Well, you talk about younger investors. Next time we get a chance to talk to you about the impact that cryptocurrencies are having on what we call the traditional markets, because it's the volatility there is certainly creating volatility for certain people who've leaned into that. We'll get to do that the next time, I hope. Bruce, it's good to see you again.
You as well.
Coming by.